Ladies and gentlemen, good day and welcome to JTL Industry Q3 FY26 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to Mr. Vikas Singh from ICICI Securities. Thank you, and over to you, sir.
Thank you, Parati. Good afternoon, everyone. I warmly welcome all of you on Q3 FY26 JTL Industries Results Conference Call. On the management side, we have with us Mr. Pranav Singla, Executive Director, and Mr. Naveen Kumar Laroia, CFO. Without taking any much time, I'll hand over to Mr. Pranav for his opening remarks. Over to you, sir.
Good afternoon. This is Naveen Laroia, CFO of JTL Industries. I welcome you to this investors conference today, the 24th of January 2026. I will now proceed to give you a synopsis of the performance of the company during the quarter and the 9 months which ended on 31st December 2025. Q3 of financial year 26 has turned out to be better than Q2. On a consolidated basis, the company's turnover increased to rupees 470.51 crores as compared to rupees 429.30 crores. This is an increase of 9.6% Q on Q. The total sales volume has risen to 90429 metric tons from 81593 metric tons, marking an increase of 10.08% Q on Q. The company's EBITDA has increased to rupees 42.26 crores from rupees 36.63 crores. This is an increase of 15.3% Q on Q. The PBT has risen to rupees 33.05 crores from rupees 30.69 crores, leading to an upturn of 8% Q on Q. On a standalone basis, the company's turnover has increased to rupees 422.9 crores and compares well with rupees 370.9 crores, marking a rise of 14% Q on Q. The total sales volume has seen a rise to 80,192 metric tons from 68,502 metric tons, leading to a 17.06% increase Q on Q. The standalone EBITDA has increased to rupees 38.80 crores from rupees 32.73 crores, leading to an upturn of 18.6% Q on Q. The EBITDA per metric ton has seen a rise to rupees 4839 from rupees 4778, leading to an improvement of 1.3%. The PBT has risen to rupees 32.37 crores from rupees 27.27 crores, leading to an increase of 18.7% Q on Q. The company has seen an improvement in its performance on a Q on Q basis, and this momentum is likely to continue in the current quarter. And beyond that, we are hopeful of further improvement by the end of the year and in the years thereafter. Now, here is a synopsis of the other main points of the consolidated performance of the JTL Industries Limited for the 9 months period that ended on 31st December 2025. For the current year's 9 months period, the company achieved a revenue of rupees 1,444 crores as compared to rupees 1,446 crores for the same period in the previous financial year. This shows that the company has tried to catch up, with the shortfall being only 0.14% year on year. The total volume of sales achieved after eliminating intercompany transactions in 9 months of 26 was 272,639 metric tons. This compares well with the sales of 263,804 metric tons in the 9-month period ended on 31st December 24. This shows a growth of 3.34% year on year. The export sales in 9 months of financial year 26 were 25515 metric tons. The corresponding figure in 9 months of financial year 25 was 26858 metric tons. This shows a shortfall of around 5% year on year. However, in the Q3, the exports are 9591 metric tons as compared to 8640 metric tons in Q3 of financial year 25. This shows a year-on-year increase of 11%. On a standalone basis, the salient points are: in the 9 months of financial year 26, the revenue was rupees 1,298 crores as opposed to rupees 1,446 in the 9 months of financial year 25. There is a gap of around 10%. However, as can be seen from the figures, the company has shown resilience by maintaining better profitability figures due to overall efficiency. In financial year 26, the EBITDA for Q3 is rupees 38.8 crores as opposed to EBITDA of rupees 37.21 crores in Q3 of financial year 25. This has shown an increase of 4.3% year-on-year. In financial year 26, the PAT for Q3 is rupees 26 crores as opposed to rupees 24.97 crores in Q3 of financial year 25. This has shown an increase of 4.12% year-on-year. As can be seen from the figures above, the current year's performance shows an improvement in the company's performance from the financial year 25. The sales volume in the 9 months of financial year 26 was 240,821 metric tons as opposed to 263,803 in 9 months of financial year 25. This shortfall of 8.7% has been met by the better consolidated performance. Challenges remain in the business and in the business environment, and the improvement in performance in 9 months of the financial year 26 only shows that the company has now become more resilient. Thank you.
We open the floor for questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Harsh from Valentine's Advisors.
Hello.
Please go ahead.
Am I audible? Hello, sir. Good
Yes.
afternoon, sir. Am I audible?
Yes, Harsh, you're audible.
Yeah. So I have like two questions. So we have seen an uptick in HRC prices in the late December and January. So what's your view on the demand outlook for India if prices continue to rise over the next few quarters? And second question is, what's your view on our recycled steel price industry in the scenario of an uptick in steel prices?
Thanks, Harsh, for your question. To talk about the upside in HRC pricing, as you witnessed, there was a price increase happening in Jan, and we are expecting a similar kind of price increase happening in February as well. Because of the whole scenario, there is restocking demand happening as well, and more than the restocking happening in dealer segment, there are also much more demand coming from government side as well. As the new budget is expected, so we'll be getting there will be new tenders coming to the market as well, in which we will participate, and accordingly, there will be more orders with a more price increase as well. And if you talk about the recycled sector market, the price grab right now for like-to-like 2M coil is 5 rupees, and if you go further down the thickness, which is 1.6 thickness, the price gap over there goes up to 7.5, 8 rupees as well. So which we think is a good amount of gap to push the secondary sales as well. And given the scenario right now of 5 rupees and going ahead, as we see the more price increase happening in HRC, the price gap will increase as well from primary to secondary. We can expect the uptick in the secondary market sales as well of the recycled material.
Thank you, sir. That was helpful. That was all from my side.
Thank you. The next question is from the line of Aditya from Axis Securities. Please go ahead.
Yeah, thanks for the opportunity. So, in order to achieve our full year 26 sales volume guidance of 4 lakhs, we need to achieve almost 1.3 lakh tons in Q4. So, how do you see, will Q4 shape up that way? How are you seeing in January 25 sales volume picking up?
Hi, Aditya. So, as I'll give you just a synopsis of the current quarter, what we're going through right now. Already, we have achieved a sales volume of 40,000 tons in this quarter. So given the run rate of this quarter, we are very sure that we'll cross 1.2-1.5 lakh tons of sales, and the before mentioned target of 4 lakh tons will be achieved in this financial year itself.
Okay. And the volume trajectory for upcoming 3 years. Earlier in the call you said, in the last call you said 6.5 lakhs, 9 lakhs and 10 lakhs sales volume trajectory. So do you still hold that guidance, given that this fiscal 26 is slightly a dovish fiscal?
As we mentioned that, because of the run rate that we've done, the earlier mentioned target of 4 lakh tons will be achieved. The next year target of 6.5 lakh tons will be achieved. And the target after that of around 9 lakh ton sales, that will be achieved as well. We sticking to our targets. There is no downtake we're doing in our targets. It remains the same as the capacity expansions are as per the plan what they're happening. And we've already got our new company, RCI Industries, under our subsidiary as well. So they are also actively contributing towards the sales in as a part of JTL group. Although it's not evident in tonnage because it's a different industry of copper, but the top line numbers will reflect because of that as well.
Okay, got it. My second question is with respect to our EBITDA per ton guidance. Means can you provide guidance for FY27 now? Means in 9 months we have achieved 3,900 almost. So for 27, are we expecting some increase in EBITDA per ton? Because earlier we have seen that on our value-added products we have sold at some discount, which has impacted our EBITDA per ton. But are we now reducing that discount? And
yes, so that was happening. That was happening in Q1, and as we mentioned that time, we couldn't clock in the onset of DFT that time. And as we are already 9 months ahead in the picture, and we have majorly developed the entire market for DFT, about 75% market of DFT is already reached where we have to reach. Like the management has already been done. There's only 25% of market which is left to be empaneled around. And with already us being empaneled in 70% of the market, we're able to achieve a decent margin of 4,500 rupees EBITDA per ton on right now situation as well. Going ahead, when we are empaneled everywhere, we're expecting that we will achieve a EBITDA per ton of 6,500 rupees in DFT segment itself.
Okay, so on a
and if you talk about the guidance of EBITDA per ton, so we still stick that we'll have the EBITDA per ton of 4,000 rupees as a whole for this year for the company. Going ahead next year, as we are launching new products such as color-coated GP pipes and the full operation of DFT as well, we'll aim to get a EBITDA per ton of 4,500 to 5,000 rupees EBITDA per ton for the full year.
For 27, for FY27 you are.
For FY27.
Okay. Just one last question. So on this PHTCL order, what is the quantum of it and what kind of EBITDA per ton are we expecting from that? And will it be a recurring order or how?
It is a recurring order. It is a recurring order which we have got the empanelment for right now. The current order which stands is about 400 tons, which is for the current fiscal year. And going ahead the next fiscal year, we shall be receiving new orders from the segment as well. On the EBITDA per ton front, it's a galvanized pipes. It should be plus of 6,500-7,000 rupees EBITDA per ton on the segment.
Understood. Yeah, that's it from my side. Thanks a lot. All the best.
Thank you.
Thank you. The next question is from the line of Pallav from Antique Stock Broking. Please go ahead.
Yeah, good afternoon. So just any revenue and EBITDA targets for you, the RCI Industries going ahead as it ramps up?
So Pallav, RCI right now, the target for this quarter is that we'll do close to 500 metric tons of sales in RCI, and that will equate to around 50 to 60 crores of top line in that segment. And going ahead, our target is that we'll reach 500 metric tons of sales per month, and that should be happening starting H2 of next financial year. So before that, till that time, we'll be ramping the capacity. The bonus part is that we already have the capacity installed. It's just that some debottlenecking has to be done and some upgrades have to be done. So we're very confident that from 500 tons a quarter, which we'll be doing this quarter, we shall be achieving 500 tons a month by H2 of next financial year.
Sure, sir. Okay.
And on the margin front, it's a little too early for me to comment on the exact margin, but it's safe to say that all the items made over there are super value-added items. They're all items which go in defense and EV cars, EV automobiles. So the product is super value-added. We have already onboarded a few customers and OEMs like Minda Corp as well, who are heavily buying from us. So with these kind of market and order flow in that segment, we are very confident that we will achieve 10% EBITDA margins starting H2 of next financial year.
Okay. Also, in terms of, we had actually forfeited some warrants, because the balance money wasn't, paid up. So what is the current number of warrants outstanding as of now?
There are no warrants outstanding as of now. Everything is done as per it has been loaded in the balance sheet. There are no current pending warrants or shares in any form.
Okay, so whatever we forfeited, that would have come into our reserves, the portion of money that we have already received.
Yes, that goes in capital reserve in the balance sheet.
Sure. Okay. So lastly, just coming back to, with the safeguard duty coming in and prices going up. So, are we really, because and probably some further price hikes expected. So restocking demand also should probably happen this quarter. So how have you seen those trends so far in the month of January?
As I mentioned that our run rate for the quarter already is at 40,000 tons. So this is clearly because of restocking happening in dealer segment and because the government tenders are yet to come. So this is purely dealer play which is happening right now. And we're expecting a price hike happening in the coming month as well, in the month of February as well. Around 2 rupees price hike is expected in the next month.
Okay. So lastly, just, I think one of the major competitors, has a product at the lower end of the primary pipe segment. So is that really impacting, any of our sales at the lower end commodity segment?
To understand the competitor offering the products in the market, he's offering maybe the leftovers or the different kind of products in the market. We are not competing in that segment or playing with those segments. We already have a good range of products of DFT as well, of galvanized as well, which are margin cushion for us. So we focus more on those products rather than fighting on those lower segment products which the competitor is trying to focus on. So it's a safe gameplay for us, and more than that, we are also there in secondary market. So to compete with those products, we have a secondary market products as well, which are at the same quality more or less.
Okay. Yeah, thank you so much.
Thank you. The next question is from the line of Sneha from Nuvama Wealth. Please go ahead.
Hi, good evening, team, and thanks for the opportunity. So for next year, you're guiding for around 6.5 lakh odd ton, which means more than 60% sort of a volume growth. Could you guide us that which are the areas, which are likely to, get you such kind of a, volume growth? What is your utilization at this point of time for Mangaon facility? How are we doing in terms of exports? Some flavor there would be helpful.
Thanks, Sneha, for your question. So, Sneha, if we are targeting 1.25 lakh tons of sales this quarter, this is just purely gameplay of all the capacities that we already have, including DFT at Maharashtra in Mangaon as well. Going ahead, when I'm saying that I'll be doing 6.5 lakh tons of sale, in that a good proportion of sales, or actually the majority proportion of sales will be coming from Mangaon itself. And how is coming from that? Because I'm launching color-coated products over there, including GP pipes as well. So all that contribution should be plus of 25,000-30,000 tons a quarter. So because of that increase in sales, I shall be touching 1.5 to 1.6 lakh tons of sales starting when my narrow width and the wider width starts. which is by April. So because of those things, we are very confident that we can achieve the 6.5 lakh tons of sales. And how the uptick of that number from 6.5 to 9 lakh tons will go is because this is a segment that will be starting in part projects, in which there will be the option to sell the products after doing CR, after doing GL, and after doing color coated. So that's why as a part mill starts working out, as and when the sales also start increasing as well.
Understood. And what are the exports target for next year?
Exports will be targeting around 60 to 65,000 tons of sales for exports next year, which is again a 10% of total volume of the sales. So they will be in a way doubling from what we are right now.
Understood. Thanks, Pranav. All the best, team.
Thank you.
Thank you. Participant who wishes to ask a question may press star and one on their touchtone telephone. The next question is from the line of Dipilesh from Credent Asset Management. Please go ahead.
Yeah, hi. Am I audible?
Yes, you're audible.
Yeah, thank you so much for the opportunity. So I just wanted to know about can you provide a specific timeline for this wider color-coated line and API grade mill, which was scheduled to open in H1 FY27? So as you are scaling a plant of Maharashtra plant from 4 lakh to 1.4 million tons.
So the wider segment will be starting production in Q1 itself. And for the API, we are too early in the picture right now to comment on that. But within the next financial year, everything should be completed for that as well.
Okay, so what is the capex that we are expecting for this?
For the wider, we've already incurred the majority capex, but close to 150-170 crores of capex is still pending on that side. And for API, we'll be doing a capex of close to 75 crores.
Okay. And next thing, I just wanted to know this: what can be our actual margin uplift from this transition of DFT from commercial to value-added grade in the most recent quarter?
So the margin what players are getting in DFT is close to 8,000 rupees. Right now, what margin we are able to get in DFT is close to 4,500 to 5,000 rupees EBITDA per ton. So as I mentioned earlier as well, when we are empaneled at most of the places and the synergies match as well, we should be targeting an EBITDA per ton of 7,500 rupees in DFT segment as well, in the lower side, on the safer side.
Okay, so when can you achieve that margin?
Starting Q1 or Q2 of H2, we should be targeting that. Before that, in this exit quarter, we should be targeting we should be having a EBITDA per ton of 5,500 to 6,500 rupees EBITDA per ton in DFT segment.
Okay. Okay, so that's it from my side right now. I'll join the queue. Thank you.
Thank you. The next question is from the line of Lokesh from SMIFS Institutional Equities. Please go ahead.
Yeah, hi. Good evening, sir. A couple of questions from my side. Firstly, basically on the volumes, we are targeting around 1.2 lakhs of tons during Q3, but somehow we have settled at around 90,000 metric tons. So what basically explains the shortfall of around 30,000 during the quarter?
So basically, we were expecting a price hike happening in this quarter. There were a lot of orders held back in the quarter because we had to focus more on our margins, and we had an option of getting price variation. So because of those operations, the target was to focus more on the bottom line than the volume front for this quarter itself. So that kind of increase will be witnessed in the margin front as well in this quarter. In Q4, because the material held back will be sold at a better pricing.
Okay. But are you confident enough that whatever you are targeting 1.3, 1.4 lakh tons during Q4 and around 6.5 lakh in FY26, so FY27, so the target is achievable considering that at the current rate?
We are 100% sure about that because, as I mentioned, as of today I've crossed 40,000 tons of sales in this quarter itself already. So even if you go by this run rate, I'll easily capture the 4 lakh ton sales target of this financial year. And as I achieve this target of 4 lakh tons this year, I've already at a run rate of 5.5 lakh tons for the next financial year, with a lot of capex on board coming up in between. So because of those multiple things factored in, 6.5 lakh tons is a safe target for us for next financial year as well.
Fine. And secondly, sir, on the competitive intensity, basically, so everyone, including your peers, are increasing their capacities, and one of your main competitor also has basically being aggressive on the increasing the capacity front. So, what your view on that, and do you think that with the competitive intensity growing up, so there will be pressure on the EBITDA for per ton front? And do you think that around 4,500 to 5,000 metric of rupees that you are targeting FY27 is a possibility, or do you think that there will be pressure on that front as well? So just want your view on those.
So which is the main competitor that you're talking about, Lokesh? First of all, I'd like to ask you that. There are a lot of multiple competitors.
APL was basically targeting around 68 lakh basically by FY28. Now they have increased their plans to around 80 lakhs right now. So aggressive capacity is and supply is likely to come over the next 2 years. So because of that, the question arises.
Lokesh, so basically market is at such a point right now that there are multiple offerings of products happening in the market. For example, there are companies offering primary, there are companies offering primary plus secondary, there are companies offering just secondary. So where I position myself in the geography is that I'm offering primary plus secondary both in the market. So in that space, I feel that I am doing well and decent right now as well. And going ahead, my capacities as they're coming, like I'm going to having an approach towards where I'm going more primary. I've launched DFT right now as well. Then I'm coming up with the API as well, coming up with the color coded as well. And as for the geographies where I'm situated, like I'm the only one in Maharashtra to have a galvanizing facility as well. So I'm very safely positioned in the plants that I have. So the capacity expansion, what the peers are doing, they are well positioned to sell the products in their market. And I'm very well positioned myself to sell the products in my market. So I think that everybody will benefit because it's a whole infra play what is happening in the country right now. And the previous year, like I gave a decent volume growth of around 10%. So that has happened without any government capex. When the government capex also kicks in, the increase of the company's performance just goes in a different direction. So we're expecting the same as well. And on the margin front, we've seen the weakness of margins happening to JTL as well, which was in Q1. The margins got weak. The only reason the margins were in a weak side were because we launched a few extra products, which was DST. If we are doing the normal course of products, our margins are very safe zone of 4.5 to 5,000 rupees throughout ever since. So as the products are settled in the market, the DFT settled in the market, we are again touching our line towards 5,000 rupees, which we'll achieve next year. And with this 5,000 rupees EBITDA per ton, we'll target a huge volume coming from new products as well. So altogether, that makes a new shape of EBITDA and the look for the company.
Sure. And this last question, so our finance cost has basically increased to around 3 crores. Our normal run rate was around 1.2, 1.3 crores on a quarterly basis. So why so just wanted to know whether our debt has increased, and secondly, what are our capex we have spent during 9 months, and what would the full target for FY26 and FY27? Yeah, that is all.
Well, our finance cost has gone up because, as Mr. Pranav has just said, we are galvanizing ourselves to meet the challenges of the future. So our CC limits were utilized at a larger capacity. So that is why the finance cost has gone up. In any case, capex is also going on. And we also had to purchase this company, RCI. So some part of the expenditure relates to that also.
So that would be new normal, 3 crores per quarter?
Well, it would not be, I would not call it a new normal, but yes, going ahead, if we move ahead in this direction, as Mr. Pranav has just outlined, so definitely our finance cost will keep pace with that only, no? because we'll have to spend more on our CC facilities. But in any case, finance cost is not going to rise dramatically. It is going to rise in tandem with the activities which are taking place in the company. The expansion, the increase in volumes, move to more value-added products. So all that will definitely have some impact. But yes, going forward, it is going to stabilize.
Sure, sure. And CapEx spend on during 9 months, and what is the target for FY26 and FY27?
For the FY26, the total CapEx spend is close to 250 crores. Out of that, 130-140 crores have already been spent, and the remaining will be spent in this quarter itself. And going ahead next year, 100 crores of CapEx will be spent on the current CapEx that we already planned, and plus the CapEx of API as well.
Okay, okay. Fine. That's it from my side, sir. Thank you for answering the questions.
Thank you. The next question is from the line of Aryan from Inved Research. Please go ahead.
Thank you. Thank you for the opportunity, sir. My question is it's like that you said we will be doubling our sales volume from 4 lakh to 9 lakh in 2 years. So if I look at the industry, apart from the industry leader, all the players have also galvanized coil pipes or API pipes or DFT pipes, but they are not growing at that pace which you are forecasting. So what gives you the confidence that we will be able to double our sales volume?
So to give you a short synopsis of what we have been doing in the past, in 2019, the total sales volume of the company was 50,000 tons that we used to do. And in this quarter itself, I have done a sales volume of 90,000 tons. So the volume of a year is what I'm doing, double of that I'm doing in a quarter right now. So the growing demand of industry, the SKU is being developed, the industry of licensing is being changed in a different way, the wood being replaced by steel and steel coming into multiple uses. All these factors account for the uptick in sales which I've done previously as well, and going ahead, which I'll do as well.
Okay. And my second question is...
And if I talk about other players having DFT, I cannot recall of many players having DFT technology. It's probably 2 or 3 of us in India having DFT right now.
Okay. And my second question is regarding our primary and secondary mix. So what is our current primary and secondary mix and the difference in the EBITDA per ton? Because if I'm remembering correctly, we are backward integrated for secondary. So what is the difference in the EBITDA per ton for our secondary mix and primary mix?
So around 35% of sales was secondary this time, and the remaining was primary. And if you talk about the EBITDA per ton, it's more or less the same. It's just that we make close to 1 rupees or 0.75 rupees extra in our secondary operations.
Okay. So you said it is same, the EBITDA per ton in secondary and primary.
It's usually the EBITDA per ton on the pipe front is the same. It's just that we end up saving 0.7 to 1 rupees extra because of backward integration.
Okay, okay. And sir, what will be the contribution mix in the FY26 and 27 from the newly acquired entity?
So from the newly acquired entity of RSK Industries, we'll be doing 500 metric tons of sales in that company in this quarter. And 500 tons of sale equates to 50 crores of top line, approximately 50 crores of top line in that company. And going ahead in next financial year, we should be touching close to 4,500-5,000 tons of sale of material in RCI for the next financial year.
Okay. Thank you. Thank you, sir. And best of luck.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah. Namaskar, sir. I'm audible?
Haji. Namaskar, ji.
Yeah.
Audible, ji.
Ji, sir. Dhanyavad, sir, for the opportunity. Sir, firstly, if you could explain to us the integration with RCI, as you were mentioning that it is 500 ton per month that you are eyeing at optimum level. So, what would be the asset turnover from the entity, and how is the integration with our existing parent company JTL?
So if you talk about the integration, there is nothing integration as such with the parent company. It is just that initially that we have to push a product from data from RCI. So there are few dealers who are common in the segment who sell copper foils and coils as well, who similarly sell GTL pipes. So a few of them could be combined to push the sales at RCI first, but going ahead in future, as I mentioned, that we have onboarded good OEM players, good customers, for example, Minda Corp as well, as which I mentioned before as well. So our aim is to increase the customer base in all these automobile companies, EV companies, and defense, where we do direct sales and get the volume which I mentioned of 500 tons for next year. That is not the target we have. The target that the actual capacity this company can do is close to 1,200 tons a month. So the next year target is 500 metric tons for next financial year, starting H2 onwards. But otherwise, we have a bigger target for that company.
Okay. And sir, and can you just specify what are the key products that will be servicing? You mentioned about the name of Minda. So it will be catering to the automobile industry in particular. If you could just give the product specification and the EBITDA per ton trajectory from RCI that we are eyeing, sir.
So basically, to give you a product portfolio, what happens is over there we have 3 continuous casting lines. The 3 continuous casting lines helps us make copper coils. Copper coils, first of all, are made in 18 mm of thickness. Once the coil is made in 18 mm of thickness, it's already a sold product in the market. But anyways, because of the various machines that we have, which are 20 high machines, the 6 high 4 machines, and 4 high machines as well. So we do value addition by bringing down the thickness from 18 mm to 0.04 mm of thickness. When the material is comes to 0.04 mm of thickness, it is called a copper foil. From coil, it becomes a foil. And that product of foil is sold to all the OEMs because it helps in making them the gasket for the automobiles. And the same product of foil can also be sold in defense as well to make bullet shells. So that's how, after coming to a product of 0.04 of thickness, it has multiple applications which have numerous uses, out of which one is defense and one is automobiles, how I mentioned.
Okay. And can you give the color on revenue part when we will be selling at 0.4 mm, that is for the auto sector, if in general, what would be the run rate, the turnover?
If you talk about today, 1 kg sold is selling close to at 970-980 rupees per kg. The rate of the product sold in to Minda and defense sector. So going ahead, as the copper increases, as you must be aware how the copper prices are increasing every year. So we can see a similar kind of margin happening and a similar kind of uptick happening in the pricing as well.
And the EBITDA per ton, sir?
It's too soon for me to say a number on EBITDA per ton, but our target is that we shall achieve a EBITDA per ton of close to 10% kind of target for H2 next financial years.
Sir, in your slide growth opportunity, you have articulated about warehousing, metro, airports, then the Jal Jeevan Mission, affordable housing, and the Indian Railways. So taking into account a lot of these areas are mainly dependent on government capex, and we have heard in schemes like Jal Jeevan and all, wherein payments have been withheld. So how are things shaping up in terms of our procurement of pipes in the Jal Jeevan Mission? Especially you have mentioned about client name of UP Jal Jeevan, and we have heard from many of the APC players that billed amount closer to 9 months or some period have been withheld by the government entity. So what's the uptake and any receivable that we have from the Uttar Pradesh Jal Nigam board?
So we haven't served ourselves to Uttar Pradesh Jal Jeevan Board, but the other places that we've been serving is Himachal Pradesh, Jammu, J&K, and Uttarakhand as well, where we have decent order book flowing throughout the year. Although, yes, you're correct, because the election scenario, the government capex was slow that side, but we're already getting a sense of it, of order picking up from the last quarter. And after elections, we are expecting good order flow coming in the sector. and there is no major amount held back from the government sector for us. So we are in normal terms, and on worst case scenario as well, the payment comes in 2.5, 3 months. There might be small parts of payment in small proportions which are held back for more than 6 to 7 months, but that's a normal course of business in which kind of problems happen in other OEMs as well and normal dealers as well. Nothing majority that amount is stuck towards government. There's nothing as such.
Two small questions. I'll join the queue. Permit me there. Firstly, sir, when we look at your slide number 11, we have seen our EBITDA trajectory at closer to 6,000 and even peaking at 6,600 per ton in the financial year FY23. I think so, the year when we listed our entity. And then there was a significant decline from 6,500 to averaging 4,500, and then again closing down to 4,000. And then this year, the previous 2-3 quarters, I think so, quarter 4 we were at 2,100, quarter 1 was 23, and now we are back to 42. So if you could just explain the nature of this operational EBITDA per ton ZOZO movement, and how will now the business model align to report stable set of operational EBITDA?
To answer you, firstly, we have been listed since 1995 on OTCI, and we came to BSE on 2011 and NSE in 2021. So it's not that we were listed that year. And to answer your question about 23, the different uptick that you saw in 23 for EBITDA per ton, that was happening due to inventory gains. Everybody is aware that how the inventory or the HRC pricing rose in the COVID scenario and post that as well during the war scenario as well. So which was a gain which every company, steel company received in every. So if you open sales balance sheet or any other companies, bigger companies balance sheet as well, you see abnormal EBITDA per tons those years. But that's how the situation was that year. And post that, when we see that our Q3 last year, Q4 last year, or probably Q1 this year and Q2 this year was a little weak, we mentioned that we started our DFT operations. DFT was a new SKU for us, which we thought that from day one would be highly profitable. But instead of being highly profitable, it was highly negative for us as well. But given the current situation, we have already turned the tables and it has become profitable for us. So that's how you see the slowly increase in EBITDA per ton happening. And we shall be touching the 4,500-5,000 rupees EBITDA per ton for next financial year. And this year guidance, in the beginning itself, of the year beginning, we guided 4,000 rupees, which we are already close to. We are already at 3,900. So we'll already cross 4,000 for sure.
Right, sir. Thank you for the correction, sir. And we hope that investors also get the right value. I think so. The stock has been languishing over a period of time, and investors have not, wealth has not increased for the promoter as well as for the investors. And so we have also seen one realignment in terms of the promoter holding. Anything we minority shareholders will need to take home, or is it a family arrangement only?
Sorry, I didn't get your point. Can you come back?
Yeah, I'm coming back again, sir. As minority shareholders, we have seen that there is a rearrangement among the promoters in terms of a gift of shares to Pranav, sir. So what should we as minority shareholders should read, or is it a family arrangement only that has taken?
It was just that I am Pranav myself, and my grandfather passed away last quarter, and it was just a gift of shares from his side to me. There was no realignment or nothing happening. It's just normal course. Nothing more than that. Normal inheritance which I've got.
Okay, sir. Okay, and lastly, sir, on when we look at the cash flow for the September quarter, the tax payment was on the lower side, the direct taxes paid. So can you please explain? I was not there on the call, so if you have answered, if you could just give me an answer why we have made lower tax payment for the September quarter, or have we made up for the gaps for the same for the December advance tax?
Yes, we have made it up in December, and we shall be meeting our target in March. So that was just an internal arrangement which we did. Tax payments are in line with what we are earning.
Okay. Thank you, sir. I'll join the queue, and all the best to you.
Thank you. Anyone who wishes to ask a question may press star and one on their touchtone telephone. The next question is from the line of Vikas Singh from ICICI Securities. Please go
Hi,
ahead.
sir. Hi, sir. So just wanted to understand in copper segment, how are we hedging? Because copper prices nowadays are very volatile. So
Vikas, we're too early in the picture to hedge right now. We are starting our operations. We've already got the correct team as well. But hedging is some part where we are left it right now, and starting February onwards, we'll be starting to hedge our stock as well. But right now, we are not hedging ourselves. It was just a lucky situation for us that the pricing was in favor of us.
noted. So my second question pertains to us, it's like 50,000 tons volume guidance. So how should we look at the value added versus the general product mix in that?
In which, can you please come back again?
That next year 650,000 target which we are making,
Yes.
value added to general mix could be?
So it will be around 35-40% value added, and the remaining will be generally.
Noted. Just one last question. Also, since we have now forgone the warrant issue, so going forward, we would have a million ton capacity right now. So we had a long-term plan of million to 2 million ton. So when we will be starting for the next phase capex, and given there's no additional money which would be put in by promoters, how should we look at our debt profile moving simultaneously? Because one, you would need the working capital for the current capacity. Secondly, any sharp capex spree would require you have to take debt if you are not infusing money. So what's our path there?
So there are internal accruals which are enough for the company and which are enough for the capex that we've planned already. The company is doing decent profits, and going ahead, we'll be doing more of profits given our subsidiaries come in as well, and the capacity of JTL has also almost been completed, which we are about to start in next quarter. So given the whole situation, we are very confident that we'll achieve the capex. And in case anything shortfall is required, rather than going for debt, the promoters will be putting in money again as well. We won't mind shying away from that. We'll keep the company towards a debt-free situation only. The normal debt of working capital is something that we'll be going ahead and increasing maybe as per time as well. But there will be no long-term debt. As and when the money will be required for the company, the promoter will come and do a pitch in.
Noted, sir. Noted. That's all from my side.
Thank you. The next question is from the line of Diplesh from Sedent Asset Management. Please go ahead.
Hello. Thank you for the follow-up. I just wanted to know that what kind of revenue contribution can we expect from the niche segments like bullet shell and EV component in FY27?
So as I mentioned earlier as well, once the product is made in a foil manner, after that the multiple SKUs open up. But we can expect close to 15-20% of the total sales happening towards bullet shells.
And what about the EV components that you're planning?
Again, 20-30%. The majority sales right now is happening towards EV components. Going ahead, which will come down to 20-30%. The remaining will be also sold in different kind of segments.
Okay. Thank you. I'll join the queue.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand over the conference to management for closing comments.
Thank you, everybody, and thanks to Taji from ISEC, and thanks ISEC team for hosting the call for us. Anybody has any other queries about any other related matter, please feel free to mail at investor@jtl.com. Thank you.
On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.